Hey, thank you so much for spending part of your day with us today. I'm Lou Ann Fulmer here with Andrew McNair. He's president and CEO of Swan Capital. So it has been more than 15 years since one of the biggest financial meltdowns of our lifetime. And we're going to talk today about what we have learned from 2008. We're going to go into our, what your money would say, time machine, Andrew. So first of all, 2008, where were you?
This will be really funny for a lot of people. I was still in high school. I remember it because I was interning at a financial firm. And so I was witnessing families' 401ks turn into 201ks.
Yes.
I mean, it was quite a time period to live through.
Yeah, it was. So let's kind of go through just pop culture highlights. That's always kind of fun to go back to. So some of the top movies at the box office were The Dark Knight, Iron Man, Taken, and then Slumdog Millionaire. Which one of those was your favorite?
Oh, I mean, Iron Man. I love that movie. That was such a great movie.
That was probably the beginning, right, of all the...
That's the whole Marvel thing from there on.
Yeah, exactly. How about the Breaking Bad? It had its TV debut then in '08. Did you ever watch that?
I'm not a fan of it. I'm sure it's great. I've heard many good things, but I know it's been on for like 5 seasons, so a lot of people love it.
Right, okay. Barack Obama elected president of the United States that year.
Of course. Yep, I remember.
And then this, and I know you, working in a financial firm, you knew all about this. Bernie Madoff, he was arrested, charged with securities fraud. They later revealed it to be the largest Ponzi scheme in history. And
Tragic.
Get this, a 90-year-old victim of his name was Ian Tierman. He was affected. Tierman told the Associated Press that his financial advisor gave him the bad news. I'm going to play this for you. It's so sad, but here's what the financial advisor said about Ian Tierman.
He said, my father, my mother, my aunts, uncles, we have lost everything. I have lost everything, and you've lost everything.
Isn't that the saddest thing in the world? That what
So
he
tragic.
did?
It really is tragic, and this a lot of times happens when there's massive market pullbacks. The tide goes out, you find out who's skinny dipping, you find out what Ponzi schemes were really just a shell game, and so it's really scary out there. So when the markets are high, like we've experienced for a long time, this is when you start uncovering, when there's market volatility, what is not as it appears.
Right. Okay. So yeah, make sure you're working with the right financial professional. And you wrote a whole article about that. What is a good sign for people to look for to make sure? Okay, I'm good. I'm still good.
Yeah, I mean, we wrote an article, The 7 Questions to Ask a Financial Advisor, and one of them should be an additional question is, where are the money's actually held? Where are the funds held? Like, for example, we hired Charles Schwab to be our custodian. That's the checks and balance system. We hired Fundamental, which is a fund administrator. We actually hired a firm to audit our financials on our real estate investments. So again, you want to ask these questions. You trust, but you also verify. And that's why it's important to have custodians, fund administrators, and audits on your financial professionals.
Okay. We are in our What Your Money Would Say time machine, looking back at the year 2008. Here's a quick look at some financial figures. Home prices, they fell from 12.4% during the fourth quarter of that year. It was the largest year-over-year decline in about 30 years. Talk about that for a moment. I know you weren't in the home buying market then, but what do you remember?
What's so funny is I was going to buy my first duplex in about 2009.
No.
So I was going to buy it at the age of 18.
Wow.
And that was my plan because the market had dropped so much. And it is one of those rare events where the stock market had dropped and obviously the real estate market had dropped.
Yeah.
And usually those don't go in tandem. And so that's why it is important to have exposure to real estate and the stock market because they usually don't go in tandem. But it was such a financial crisis of our times. I mean, it was the Great Recession for good reason because both of those things happened at one time.
Right. And then, of course, inflation. Okay. Let's look at price of milk. back then, $3.80 a gallon. That's still kind of expensive to me. Eggs, $1.99, very cheap. Bacon, $3.66 a pound. So we know we're going to experience the incline of prices for goods and services, okay? But yet our income, it could stay the same. We just have to make sure we're smarter with our money. That's why the name of our show, right? What your money would say. So talk about inflation, how you and your team deal with inflation for retirees.
Yeah, I mean, most of our clients are about to be retired for 10, 20, or 30 years, and they're concerned with their money not being lost in a 2008 scenario. They've went through a 2008. They were working when that happened, but they remember it. It's still a fresh wound that if they go back and they think about it, they say, I will never want to go through that again. So what do most families do? They go to the opposite extreme. They say, I don't want to lose anything. And the problem is if you are in a safe investment, you're not necessarily safe. You're safe from market volatility, but you're not safe from inflation. So a lot of times we're helping clients, Luann, that have money in CDs and money markets to the tune of $300, $500. I met with a family this year that had $2 million sitting in cash. Ooh. And so that cash is on the sidelines. It's lazy money. It's not going to beat inflation long term. And a lot of families, they think, well, I'm worried about the economy. I'm worried about the election. I'm worried about our country. So I'm storing up cash. And I think, hey, let me shake you out of into your senses. Cash is not safe. If there's a government collapse, your money is not even worth the paper. You should have bought firewood with your money. So that cash will not keep you warm. So it's important to invest in real assets, things like the stock market, things like real estate, things like private equity, and things that have had a long track record of beating inflation for the long term.
Okay, I want to go back to something that you said a moment ago about how, that the joke that the American 401ks became 201ks. Go into a little detail there.
Yeah, absolutely. I mean, most 401ks, if they were invested in the S&P 500, which a lot of them were, they had dropped 50%. A lot of people forget this, that the stock market lost 37% in 2008, but it actually lost 50% at its lowest cut. And that was a very scary time. But if you were wise, which many investment firms looked at that and they said, hey, if the market has dropped over 30%, we need to actually be in a buying position. And this is what we've been doing. We've been getting prepared. The market's at all-time highs at the time of this recording. So right now that it's at the all-time highs, we've been getting prepared for a market pullback. It may not happen for 3 years. It may happen in 3 days from now. I'm not sure, but we've been preparing. Why? Because all of the thermometers, the Shiller PE ratio, which I encourage you to Google, the Shiller PE ratio, which compares our company's price to earning ratios for all of the market compared to history, doesn't look good. If you look at the Buffett indicator, which compares our GDP, our gross domestic product of a country compared to our stock market, we're way over our skis at 202%, 2 standard deviations above historical trend. And if you look at the inverse relation with interest rates, you look at all of these parameters that shows that the market is overvalued, you need to start getting prepared for a potential market pullback. It may not happen for a while, but you'll be happy that you did.
Yeah, plan for it, which is what we are urging you to do today. Pick up your phone, grab your cell phone, wherever it is, put this number in, 800-848-8768, and you may call the team at Swan Capital. Okay, get on their calendar. If you prefer texting, we make it easy on you. Text the word Swan, and then you'll get a response back, and you'll get on their calendar that way. But you have the opportunity right now to get some guidance on your retirement, all these things that we talk about right now on our show. You hear us every weekend, and we know you're contemplating, and do it now. You may as well. Don't delay, because you're just a day closer to retirement right now if you're not already there. 800-848-8768. And remember our website, swan-capital.com. And you're listening to What Your Money Would Say with my good friend Andrew McNair. So happy to have you along with us. We are in the What Your Money Would Say time machine from '08.